Howdy, Fi Guys. A few months ago, amidst the excitement of planning the most significant event of my life so far, my wedding.
Oh,
Congratulations.
congrats.
Very cool. I found myself in a bit of a financial bind. Alrighty. Weddings are expensive, and I wanted to make sure that everything was just perfect. Without much hesitation, I took out a $20,000 personal loan to cover the costs. I didn't think twice at the time. After all, people do it all the time, right?
Pause. No, people don't do it all the time. You're telling yourself a story. The one thing I worry about was without hesitation, I took out $20,000 personal loan. So I have a feeling I know where this is going to go, but let's see.
As I navigated through the sea of wedding preparations, I kept hearing the same old financial advice that we've been drilled into. Never touch your 401k. It's like a mantra repeated over and over and over by every financial guru in the country. So I dismissed the idea of taking a 401k loan out without a second thought. I figured better safe than sorry, right?
Good. Okay.
Pause.
One thing I noticed at the beginning, they said, I navigated through this wedding thing. I did this stuff. Like, where's your partner in all of this?
Mm-hmm. It's true. That's true. It doesn't say if it's the guy or the girl, though. So
It's a guy. It's definitely a guy.
Statistically, it is an hombre.
Statistically, there is an 86% chance it's a guy. If they wrote into this podcast, it's a guy.
It's a guy.
And based off the I navigated, my wife would always say, we did these things. We did these things.
Interesting. I'm a
Me
we
as a
person.
man would always say, I did this.
Nah. I always say we. I say we even when I'm just alone. I say we.
Because you're more feminine.
I mean, you remember the first meeting. Get out of here. You remember the first meeting I took with you. Remember? And I kept referencing we because like it's myself. I'm by myself, but I have a community. So to me, it's like I got a whole group of people, and you're like, who is we? Like, do you have a partner to do that? I'm like, no, it's just me in my community. Hey, we were like thrown off by that, so I just remember that from our first meeting. Anyway, back to the viewer mailbag. But today, for some reason, I decided to take a closer look at what a 401k loan actually entails. Maybe it was the stress of paying off a personal loan of $20,000, or perhaps the curiosity that comes with wanting to understand every option fully. I highly recommend, looking into every option fully before you make a decision.
Yeah, that's thus far, this is one thing that I agree with. You should always do your own research.
Yes. And I want to preface that I am reading the letter. I'm not speaking as if this is truth. Just a forewarning. Either way, what I discovered left me baffled and, quite frankly, a little bit frustrated, understandably. In hindsight, my decision to take out $20,000 of personal loans for my upcoming wedding a few months back feels like a misguided choice. Today, I hope it was a nice wedding. Maybe it hasn't come up yet. I don't know. Anyway, today I decided to do what I should have done from the start. Educate myself about 401k loans. It's good that you're conscious. That's good. And what I found was a bit shocking. It seems completely illogical that it seems completely illogical that these are so often dismissed or discouraged.
Okay.
Alrighty, here we go. Here's the thing. When you compare the average growth of a 401k, typically around 10%, the average interest rate on a personal loan, which is usually about 13%, the difference is glaring. Without even diving into the finer details, a 401k loan seems like it would almost always be a better option than a personal loan, right? And let's be real, personal loan rates can go much higher than 13%, while a 401k can dip as low as 3 or 4% per year in growth.
Okay, we have to pause. Okay. So I'm looking ahead, and it looks like he's going to make a bunch of points. So rather than you reading through the whole thing and then me trying to debunk everything, let's just take this point by point. So before we get into how wrong he is about the 10% average thingy, that doesn't make any sense. I first want to go and talk about this. In hindsight, my decision to take out $20,000 personal loan for my upcoming wedding may have been a misguided choice. So I thought that he was saying, maybe I shouldn't have taken money out for my wedding. But what he is actually saying is, I should have taken the money out for the wedding. The misguided choice was not doing it from the 401k. So first off, we have to figure out what's the fundamental question. The fundamental question he is asking is, should I move the 401k loan? But there's a deeper question, which is, should I have taken the money out for a wedding? And I'm going to argue, he's not even asking that question, because he has taken that as truth. So before we get into anything, your logic is already fundamentally flawed, because you're starting at the wrong place. You're asking the wrong question. The right question is, should I have taken out a personal loan for my wedding? There is a right and a wrong answer to that, and I'm not going to tell you which one it is. In general, it's typically not right to take out a personal loan for a wedding. I understand that a lot of people have to do it, but that does not mean that you had to do it. $20,000 loan is a $20,000 loan. That's $20,000 you've taken against your future. I'm sorry, Tom, you're going to say something.
No, I was going to say, like, is there a number that you'd be accepted and okay with taking out a loan for a wedding?
Something that you can pay off in a month.
Okay.
If you're going to take off a loan, my goal is I don't try to spend money I don't have.
True.
If I can't afford it, I don't do it. When I paid for my own wedding, I paid for it on credit cards, yes, but it was money that I had. I used the credit cards to get the points to be able to go on the honeymoon. The only thing that I think it's I know. The only thing that I think it's okay to spend or to take out a loan for is if you're buying something that you see as a future asset. So, for example, a house. In general, a house is not an asset; it's a liability. But no one's going to walk off of the street and buy a $500,000 home straight up. It's just impossible. The average home prices is $300,000 to $500,000, depending what part of the country you're in. No one just has that, so you have to take out a loan there. You do not have to take out a loan for your wedding. I understand that's what general people do, but in general, people also die young and eat crap and they don't work out. I don't want to be general. The worst thing I could be is average. So let's get back to this. The writer claims that because the average growth of a 401k is 10%, which is first off wrong, and on average, a personal loan is 13%, a 401k loan is almost always better. First off, I don't understand where you got the 10% annual from. What I'm assuming you're thinking is that the stock market on average has returned 10% when reinvesting your dividends. So you think that that means that the stock market returns 10% per year every single year. 401ks vary. You could maybe have a stock market like an S&P 500 in your 401k option. You might not have that. You could have really shitty options. So first off, fundamentally flawed right there. That's completely wrong. There is no guarantee of 10%. In addition, the market could be volatile. It could go negative, but it could also go up 25%. And if your rate of inflation is wrong, then we're going to be completely messed up there, because I don't even know where to start with this guy. He's like so off base. But the long-term impacts of withdrawing from a 401k has nothing to do with the growth that you're taking it out of. It has to do with the temporary or with the impact on the long term of taking money out of your account that is no longer compounding. You have a snowball that's growing for you. That's compound interest. Your money is growing more money. The moment you stop that snowball, it is no longer growing for you. And you're stopping that snowball, not for something to buy another asset, to buy something that's going to grow that snowball more in the future. You're buying it to purchase a liability, to purchase the wedding. I think I think honestly, this guy's narrowly focused on the interest rate, and he's not considering all the factors that the loan is going to do against him. Personal loan or 401k. I say we keep on moving on, though.
You're not going to like what I have to say next, but I'll continue.
Love it.
On top of that, 401k loans don't come with penalties or taxes. Oh, okay. Okay. I'm just going to continue. You get the exact amount you request, and you pay it back into your own account. Okay, it's that simple. If it's that simple, why are you writing into a finance podcast? Anyway, the more I think about it, the more absurd it seems to recommend anything other than a 401k loan in situations where you need cash.
Okay. So yeah, that's a straw man argument. If you say that there's no penalties and there's no taxes, then it's a straightforward argument. Yes, that all sounds well and good, but there is nuance to every single conversation. So what happens, Mr. Writer, if you were to leave your job? If you were to leave your job, whether voluntarily or involuntarily, the remaining balance to your 401k would be due immediately. How does making $20,000 payment to your 401k that you just took $20,000 out sound to you? Additionally, if you weren't able to pay it back, then you'd be subject to income tax and a 10% early withdrawal penalty, given that you're not 59 and a half, which if you're getting married, I'm assuming you're lower than 59 and a half.
Yeah.
You're overlooking the risk of being unable to repay the loan if your employment circumstances change. And this could also lead to like significant tax implications and penalties. Everyone hates taxes, which the traditional loan, which I'm also saying is not a good option. They're both not good options. The best option is not to take out the fucking loan. But since you're going to take out the loan regardless, there are no additional penalties for removing, with the exception of the interest, that's going to happen regardless. The interest is going to be there regardless if it's a 401k or it's a traditional loan. Some people will say, well, it's okay because when I do a 401k loan, I'm paying the interest back to myself. But what you're really losing there is you're losing the ability for your money to continue to compound. You're forgetting about the time value of money. Let's see what else he has to say.
Why on earth am I paying Wells Fargo 15% interest when I could be paying myself back at 10%?
Oh my God, I just talked about that. Okay.
There's no mathematical explanation that justifies this. Couldn't possibly. Makes me wonder why I didn't just take out the 401k loan in the first place and use it to pay off this wedding immediately.
I'm going to say it comes down to opportunity cost of borrowing. So while the interest might go back into your own account, you're exactly right there. The money used for the loan is not in the market earning its returns. The returns of your investment could be potentially higher than the interest that you pay back, especially on the long term, especially when we project this out 20, 30 years. Yes, you might be paying it back to yourself at 10%. 10% interest on, I don't know, $20,000 is $2,000. But what could it have done in the market had that $20,000 been in there? It could have been 2,000. It could have been 4,000, 6,000, 8,000. We have no idea. But what you're doing is you're still stopping that snowball from growing. And now we're having to make a bunch more things go right that you have no control over in order for you to make out ahead.
Bingo.
Another thing that we need to think about is double taxation, which he is not thinking of. So the loan repayment, including the interest, are made with after-tax dollars. So when you eventually withdraw the money from your retirement, you'll owe the taxes again, leading to a form of double taxation. Whenever you take a 401k loan, you have to pay that, you pay it back in after-tax dollars. So every check that you got has already been taxed. Eventually, when you withdraw your 401k, given that's not a Roth 401k, you're paying taxes on it again. So you're double taxing yourself. You're going through another tax cycle, which if your marginal tax rate on average is 15%, that's 15% on top of the interest rate you have to pay to yourself that you have to make in order to break even. What else does he have?
And here's another thing. Here we go. Lock in. And here's another thing. 401k loans don't affect your credit score. This is just another clear advantage they have over personal loans. So why isn't this talked about more?
So what they're saying is that because the 401k doesn't affect your credit score, it's a clear advantage?
I guess.
Is that what they're saying?
That's what they're saying. Yeah, that's what they're saying.
So short-term benefit, which that's true. Yeah. Everything he's saying thus far is true. And there's a counter argument. So short-term benefits versus long-term benefits. While you're 100% true, taking a 401k does not directly impact your credit score, I would argue that it ignores the long-term risks. So if you can't repay the loan due to job loss or other financial difficulties, which if you're taking a $20,000 loan, I'm assuming you have other financial difficulties, the consequences, which would be the taxes, the penalties, and the loss of retirement funds, can be far more detrimental than the temporary dip of your credit score in personal loans. Furthermore, personal loans, if managed responsibly, can actually help to improve your credit score by being able to show the credit bureaus that you have the ability to make on-time payments, therefore improving your credit history. A 401k does not improve your credit history. Yes, it does not hurt your credit history, but it also doesn't help.
That is true. I know a lot of people that argue that 401k loans are risky because if you lose your job, you'll end up having to pay back the remainder in full. We talked about this. But isn't that just a worst case scenario? And even if that does happen, couldn't I just take out a personal loan that I was going to get anyway? How does this make the personal loan better than the 401k loan? I think now correct me if I'm wrong. He's referring to the infinite banking strategy, correct? Am I off base? You
No,
get a
he's not.
loan, and then you get
No,
another loan to pay
I
off
thought you
that
were even in
loan.
banking with life insurance. No, yeah. So
And then you
he's
just keep
basically
getting more
saying,
loans.
I'm just gonna go. I'm gonna get a credit card. I'm
Yep.
gonna run it up all the way, and then when I need to pay it, I'm gonna get another credit card, and I'm gonna take that payment on there. It's like going to a bunch of payday loan places. I go to one on one corner. I take out $10,000. When that's due, I go to another payday loan place. I take out another $12,000 to pay that plus the interest. And I just keep this going. That's the idea.
That's the idea. That's the. I think
It works every time.
Was it Buffett who theorized that possibility, or was that I think of someone else?
It works 60% of the time, every time.
Might have been Jimmy Buffett. I don't know.
Either way. Okay. So the writer's arguing that why not just take out a 401k? Because if I lost my job, then I had the ability to just take out a personal loan. When you go in for a personal loan, they need collateral. They're looking to see what's your credit worthiness. Your job is the thing that gives you the ability to take out a personal loan. So tell me how this sounds to you. You lose your job because you're an idiot. And now it's much more difficult for you to get a personal loan to repay back the 401k loan that you took out. Therefore, destroying your income ability. And now you won't be able to take out the loan because you lost your job. In order for you to get another one, you have to get a new job. And now, since you can't repay the loan, you have to pay the additional taxes and the additional 10% penalty because you're not 59 and a half.
Not ideal.
You're basically relying on a personal loan to play as your emergency fund in life.
Yeah. That you may or may not even get.
If you lose your job, likely you won't.
Others say 401k loans are bad because you need to address the root cause of your debt. Sure, I get that borrowing money isn't a solution to a deeper financial issue, but
I'm just going to do it anyways.
But, send it, bro. Just send it. Yeah. But that criticism applies to all loans, not just 401k loans. It doesn't negate the crystal clear benefits of a 401k loan and what it offers if you're in a situation where you need to borrow money anyway, right? Do you want me to read this last part?
Hold on, give me a second. Okay, so basically what he's saying there is that he's arguing that I'm going to take the loan regardless. And if I'm going to take the loan regardless, then why shouldn't I take it from the 401k? And we've already talked about a bunch of reasons that you shouldn't borrow against the 401k. So yes, if you're going to do it either way, if you're going to take the 401k, you're going to take the personal loan. I've already told you the reasons why not take the 401k. If you lose your job, that you're not going to increase your credit score, that most importantly, you're stopping that compounding from happening. You're stopping your money, in that you're going to enact future costs that current you is not going to have to deal with, but future you is going to have to deal with those costs. In addition to all of those types of things, yes, a 401k loan might solve your immediate cash needs, but it does nothing to address the underlying financial habits and issues that we actually need to focus on. What we should actually be focused on, the real question is, why did you take out $20,000 for your wedding? If you couldn't afford the wedding that you wanted, then either you wait on the wedding or you downgrade the wedding to be had.
Or you ask your spouse to help pitch in, or you ask, traditionally, isn't it tradition that like the bride's parents pay for the wedding?
Yeah, but that's not happening as often anymore. No. I think for our day and generation, like we're not doing dowries anymore. Like that's just not a thing. I think in our day and generation, it's up to the couple to pay for their wedding. And that way they get to full control over it. If your parents are going to pay for the wedding, then it's your parents' wedding. And they get to tell you how things work. They get to tell you who's coming and all this stuff. But if it's your wedding, it's your wedding. And if you have a budget wedding, if you have to have it in your backyard, if you have to do whatever it is, that's okay. I would much rather have a nice wedding and be able to afford a down payment on a house, be able to afford being financially independent, rather than having one magical day that has now for the next however long it takes them to pay off this $20,000 has set me up. One day for potentially the rest of your life. It's not worth it to me.
I can't help but feel I was misled. Maybe it's time to rethink this whole financial rules thing we've been so conditioned on. From skip the loan with high rate pain, pay myself, and stay in the game.
I did agree with him on that. We should rethink all financial rules, and we should definitely think for ourselves. 100% right there. But his 401k loan, it focuses on short-term benefits while overlooking long-term risks entirely. and the broader financial impacts of the choices that you're making today. While a 401k loan may have advantages in certain situations, they come with certain significant and severe requirements and careful consideration, because if you mess up on these requirements, they have a detrimental impact on your long-term financial well-being. What we really need to do is focus more on what's going on with your spending. Why do we not have an emergency fund? Why do we not have any investments? Why are we having to turn to a personal loan in order to do this kind of stuff? I understand weddings are expensive. I get it. Can we have delayed the wedding by another year to save up $20,000 or 2 years or whatever it is? Or if we don't want to do that, could we have lowered the wedding cost by $20,000 to be able to have the wedding that we still want? Maybe it's not going to be amazing. Maybe you're not going to ride on an elephant. Maybe you're not going to have the DJ that you wanted, but you're not also going to be $20,000 in debt. There's always a trade-off. And right now he is focusing on short-term gratification at the detriment of long-term gain. He loves himself so much right now that he's willing to say, fuck future me, that guy has to deal with that. And the hard part is, both people is still you.
Bingo. Any final thoughts on that one, Chris?
Nope, that was
that's it.
That definitely frustrated me.
That was a frustrating one. Well, we hope you have a beautiful wedding, at least. A very memorable wedding. Take lots of photos, videos. Best of luck. And I hope you adhere to what we talked about today. But
I hope you and your spouse get on the same financial page. So I hope you guys are communicating and talking. There's a lot of stuff that was wrong with this, but the whole I thing, there is no I in team. You and your spouse are going to be a team. You can't be me. It needs to be we.
Absolutely. With that being said, thank you for writing in.
This video podcast is sponsored by Monzon Wealth. The content in this podcast is for informational purposes only and should not be considered financial advice. We do not endorse specific products or services. Past performance does not guarantee future results. The opinions expressed are those of the host and guests, not the podcast sponsor.
It is crucial to consult with a qualified financial advisor or professional who can provide advice tailored to your specific needs before making any financial decisions, investments, or taking any other actions. If you are seeking specified help, you can reach out to Chris at monzonwealth.com.